Welcome back to Investing Talk Podcast.
Great to be here.
We're really glad you could join us today. We're going to get into the upcoming earnings for Mongodb.
Yeah, MDB. Always an interesting one to watch.
Definitely. They're right at the center of that cloud database space. So our goal today is to give you a clear picture of what to look for in their report.
Right. Cut through some of the noise.
Yeah, exactly. Go beyond just the headline numbers, Understand the implications.
And what might be driving things behind the scenes.
Precisely. Now, if you find these discussions valuable, we'd really appreciate if you could subscribe, maybe like the video, leave a comment.
It genuinely helps us make more of these.
It really does. And hey, if you're feeling extra generous, you can always buy us a coffee. The link's usually somewhere below.
Yeah, cute is gone.
And seriously, if there's a company you want us to look into for a future analysis, just drop in the comments. We do read them.
Absolutely. We're always looking for ideas.
Okay, so let's unpack this Mongodb situation. Their earnings report is just around the corner, getting a lot of buzz.
It always does. High growth, key tech player.
For sure. So just to set the scene, can you lay out the basics? When's the report due, and what's the general street consensus looking like?
Right, yeah. So MongoDB's report, that's set for August 26th, 2025.
Okay, August 26th.
Yeah, and it's after the market closes.
Got it, after the bell.
Exactly. So we won't see those numbers until the trading day is done. Now, for the numbers analysts are expecting.
Yeah, what are they looking for?
On the revenue side, the range is roughly $465 million up to about $479 million.
Okay, quite a range there.
It is. And then for EPS, earnings per share, the consensus is a bit tighter. Wall Street's looking for somewhere between 64 cents and 66 per share.
64 to 66 cents, those are the main benchmarks then.
Those are the numbers everyone will be comparing against initially, yes.
So those are the outside expectations. What about the company itself? How do these analyst numbers compare to MongoDB's own guidance from last quarter? Sometimes there's a mismatch.
That's a great point. And actually, in this case, it's pretty interesting. MongoDB's own guidance for this quarter, Q2 2026.
Yeah.
It lines up really closely with the analyst consensus.
Yeah.
Management guided for EPS between 762 cents and 66 cents.
Oh, okay. Right in that same ballpark.
Exactly.
Yeah.
And revenue, they guided for $465 million to $479 million.
So basically the same range the analysts landed on.
Pretty much identical.
Mm-hmm.
Which, can suggest management feels the street's expectations are pretty achievable. They aren't trying to dramatically undershoot or overshoot with their own forecast.
That alignment is interesting. No sandbagging, maybe no overpromising either. Now, you often hear about a whisper number for these tech stocks, right? Like an unofficial target that's a bit higher.
Yeah, that happens a lot with momentum names.
Is there anything like that floating around for MongoDB this time?
It's funny you ask. While that whisper number concept is definitely real, especially in tech, we're not really seeing a prominent one for MongoDB this quarter, at least not publicly.
Oh, really? That's unusual.
It kind of is. It means there isn't that sort of extra unofficial pressure pushing expectations way beyond the published numbers. The focus seems squarely on the official guidance and the analysts' consensus.
Okay, so the official numbers are really the key battleground this time. Good to know. Let's shift to their history then. MongoDB's stock reaction after earnings. It's been a wild ride, hasn't it?
Oh, absolutely. Volatility is kind of its middle name post-earnings.
Huh. So walk us through the last few quarters. Beats, misses, and crucially, how the stock actually behaved.
Okay, looking back over the last 4 quarters, it's mostly been strong on the operational side, but yeah, the stock reaction is key. So Q1 2026 just reported, big beat. EPS was the $1 versus the 0.66 consensus.
Wow, nice beat.
Yeah. Then Q4 2025 also beat. Actual EPS was negative 0.80 cents, but the consensus was worse at negative 0.94 cents.
Okay, still better than expected.
Right. But then Q3 2025, that was a miss. They reported negative $1.03 when the consensus was for negative 71 cents.
Ouch. Okay, so one miss in there.
One miss. And before that, Q2 2025, another strong beat. $0.96 actual versus $0.51 consensus. So 3 beats and 1 miss recently.
Mostly beating then, but like you said, the stock reaction, it doesn't always follow the beat, does it?
That's the critical part. Even on some of those beats, the stock reaction has been, well, unpredictable. We've seen these really volatile price swings.
How so?
Well, sometimes the actual move in the stock price after earnings blows past what the options market was even pricing in.
Really? Bigger moves than expected?
Significantly bigger sometimes. which suggests, maybe very reactive investor base, or maybe just how quickly sentiment can shift on these growth names based on subtle details in the report or guidance.
High event risk, as they say.
Exactly. And there's this pattern sometimes where it gaps up on a beat,
Yeah.
but then it reverses or sells off after that initial pop.
Ah, the sell the news phenomenon, but on steroids.
Kind of. It makes trading it through earnings incredibly tricky. The market's immediate gut reaction seems to matter almost more than the raw numbers themselves.
Okay, so super volatile reactions, but underneath all that drama, what about the company's fundamentals? Are the key metrics healthy?
Yeah, fundamentally, the trends have actually been pretty encouraging, which adds to the complexity.
How so?
Well, they've shown pretty consistent revenue growth, often growing faster than the broader sector.
That's good. Implies market share gains, maybe.
Could be. And their gross margins have been pretty stable, even slightly expanding sometimes. That's healthy.
Shows efficiency in their core business.
Right. And operating income has improved too. Seems like management's been disciplined on costs.
Yeah.
They're trying to balance that growth with efficiency.
Which the market definitely wants to see now. Okay, makes sense. Let's zoom out then. Beyond MongoDB's own execution, what about the bigger picture? Any major company-specific news this past quarter, like M&A or big product drops?
Good question. Specific to MongoDB this last quarter, it was actually pretty quiet on the major catalyst front.
No big splashes then.
No major M&A deals announced, no huge game-changing product launches hitting the headlines. It felt more like steady execution.
Okay.
Continuing to expand their cloud offerings, growing their subscription base, more about deepening their existing strategy than some big pivot.
So the results will really reflect their core business execution in the current climate.
I think so, yeah. It puts the focus squarely on that.
Right, so if it's about the current climate, how has the environment been for software stocks like MongoDB, and what about the macro trends?
Yeah, the broader context is crucial. It's been, frankly, a mixed bag for software infrastructure stocks.
How come?
Higher interest rates have been a major headwind. When rates go up, future earnings for growth companies get discounted more heavily.
Right, impacts valuations.
Big time. And that's led to some investors rotating out of these high-growth SaaS names, looking for more near-term profitability or cash flow.
So less appetite for growth at all costs.
Definitely. Now, the good news is underlying cloud adoption is still strong globally. Digital transformation isn't stopping.
True.
But the macro risks are still there. Economic uncertainty, inflation concerns, potential slowdowns affecting IT budgets. It's a challenging backdrop.
A tough balancing act. Given that environment, how are the analysts who cover MongoDB reacting? Have they been adjusting their price targets or outlooks much?
Analyst commentary has definitely picked up on that caution. We've seen price targets mostly holding steady, but some have been trimmed slightly.
Okay, a bit more conservative.
Yeah, and you hear more caution about valuations in this rate environment. Plus, some analysts are pointing towards potentially slowing growth in the second half of the year if those macro headwinds bite harder.
So the street's watching very closely, maybe tempering expectations a bit.
Seems that way. They want to see continued strong execution.
Makes sense. Okay, let's talk technicals and options. How's the stock itself been acting leading into earnings? And what's the options market telling us about the expected move?
Well, the price action itself, leading into the report, has been sort of sideways to slightly lower.
No big run-up or sell-off beforehand?
Not really. It reflects those tempered expectations we talked about, kind of a wait-and-see mode. No strong bullish or bearish momentum going in.
Okay, so the stock chart isn't screaming one way or the other. What about the options market then? That usually tells a story about expected volatility.
Yeah. That's where it gets really interesting for MongoDB. Option volumes are definitely elevated, which is pretty standard for them given their history.
Right, expected.
But the key is the implied volatility. The options market is pricing in a potential move of, get this, plus or minus 9% to 12% around the earnings event.
9 to 12%, that's huge.
It is. Compared to maybe 3–5% for a lot of other large tech stocks, it just underscores how much of a powder keg the market thinks this earnings report could be.
Wow. Okay, so a massive move is basically baked into expectations. Given that, let's game this out. What does a bullish outcome look like? What needs to happen?
All right, the bullish case. First, obviously, you need a solid beat on both revenue and EPS.
Stakes.
Pretty much.
Yeah.
But crucially, you'd want to see them raise their full-year guidance. That signals confidence.
Yeah, guidance is key.
Definitely. Also, look for continued margin improvement. Efficiency matters. And strong cloud adoption metrics showing customers are still flocking to the platform.
Okay.
And finally, any positive commentary about enterprise spending picking up would be a big plus. That combo would likely get the bulls excited.
Got it. Beat, raise, good metrics, positive outlook. Now, the flip side, what are the warning signs? What constitutes the bearish case?
The bearish case starts with a miss on those headline numbers, revenue or EPS. That's an immediate red flag.
Okay.
Even worse, though, is lowered guidance. If they signal weaker growth ahead due to macro issues or competition, that usually hits the stock hard.
Guidance again seems critical.
Absolutely. Also, watch for any signs that subscription growth is slowing down. That's the lifeblood of a SaaS company.
Right, recurring revenue is everything.
Exactly. And any unexpected pressure on margins would also be a negative signal.
Okay, clear signals to watch for. If you had to boil it down, though, one single metric or piece of commentary that you think is the absolute most important this quarter.
The single most important. I'd have to say it's the forward guidance on subscription revenue growth.
Subscription revenue growth guidance. Why that specifically?
Because that cuts right to the heart of their future growth potential and the health of their core recurring revenue model. It tells you about enterprise demand for their cloud database.
Gotcha.
A strong outlook there can outweigh a slightly soft current quarter sometimes. But a weak outlook that's really tough for the market to swallow suggests potential fundamental issues. Investors will dissect that guidance intensely.
That makes perfect sense. Focus on the forward look for subscriptions.
Okay, bringing this all home,
Wrap.
what's your overall take heading into this report, and how might different investors think about strategy?
Okay, overall assessment. I'm leaning neutral on this one. Confidence score, maybe a 5 out of 10?
Neutral, 50-50. Why? Well, the risk-reward feels pretty balanced. You've got the mixed macro signals, you've got the high bar from past beats, but you also have the stock not really running up into the print.
So conflicting signals.
Exactly. And we know, based on history and the options market, that a big move is likely, but predicting the direction. Really tough with the current setup. It feels like a coin toss from here.
High volatility, uncertain direction. That definitely calls for careful strategy. So what does that mean practically for investors?
Okay, strategy-wise, if you're risk-averse, honestly, probably best to just avoid holding Mongodb shares through the earnings announcement.
Sit this dance out.
Pretty much. The potential for a sharp, unpredictable move is just too high if you can't stomach that kind of volatility.
Makes sense. What about for someone willing to take on more risk?
For the risk-tolerant investor, given the high implied move, that 9–12%, and the history of big swings, maybe consider an options play like a straddle or a strangle.
Betting on volatility itself.
Exactly. You're betting on a big move, up or down, big enough to cover the cost of the options. You don't have to guess the direction correctly, just that it will move significantly.
Interesting. And what if someone does want to bet on direction? Bullish or bearish?
If you're looking to make a directional bet, I'd strongly suggest waiting. Wait for the earnings release, see the numbers, hear the guidance, and watch the market's initial reaction.
Let the dust settle first.
Yes. See if it gaps up and holds or gaps down and stays weak. Get some confirmation of the immediate trend before putting capital to work. Trying to guess beforehand is really just gambling on this particular name.
Patience and confirmation. Sound advice for a volatile situation. Well, this has been incredibly helpful, really unpacking all the layers around MongoDB's earnings. It's not just about the numbers, but the history, the context, the market pricing. It gives you a much richer way to think about it.
Hopefully gives everyone a better framework.
Definitely. And it makes you think about how much preparation matters when analyzing these events.
It really does. And this raises an important question, I think.
Go on.
In this world of constant earnings noise and market swings, how much weight should we put on predicting these short-term moves versus really understanding the long-term fundamentals and the strategic shifts happening within a company and its industry?
That's a fantastic question to ponder. Finding that balance between the short-term tactics and the long-term vision. A lot to think about there.
Indeed.
Well, thank you again for guiding us through all of that. And thanks to all of you for listening and trusting us with your time. We hope this helps you navigate the markets.
Always a pleasure.
We'll look forward to our next session. Until then, stay curious, stay informed, and keep making smart decisions.